For Morningstar, I'm Jeremy Glazer. I'm here with Bob Johnson. He's our Director of Economic Analysis. He thinks investors are underestimating the potential of inflation. We're going to dig into that a little bit more. Bob, thanks for joining me.
It's great to be here today.
All right, let's look at the inflation numbers that just came out this week. There didn't seem anything that was that out of line. Why do you think that we're kind of underestimating the threat of inflation here?
Absolutely. I mean, we did get the numbers this week, and it showed the headline number, that's the all-in number, if you will, came in at 0.3% month to month. That annualizes to 3.6%. That's a pretty nasty number. Yes, people were expecting a relatively high number based on gasoline prices and a few things that were known in advance. Nevertheless, that's a pretty high number for a headline number, especially if you remember the new Social Security checks with the new amounts went out, and they had 0.3% for the whole year. In there. And here we got inflation of that much in a single month. So clearly those people on Social Security are at a disadvantage when you look at the headline CPI numbers. Now, even the core was about 0.2%, which annualizes to 2.4%. That's not all that far from where it's been. The core has held in very steady over the last year, kind of in that 2.2, 2.3% range. And our thought is that number is going to creep up a little bit this year with some of the labor shortages to something that's more like 2.4%. So that number will be higher. But the scary thing is now this year energy prices will likely be up from a year ago because of the big dip we had at the beginning of last year. And it's not happening again this year, by the way, and at least in January. And so that would seem to indicate that the headline inflation number would be even higher than that. We could be up in the 2.5, 2.6% range. And the only thing that's keeping that from being worse is that food prices are continuing down.
Where does that leave the Fed then if they're looking at numbers like this and the potential for that headline number, that core number to keep moving up? Do you think they're going to act more aggressively? Do they think they're out in front of this?
Well, again, in terms of the Fed and inflation, I mean, that's clearly one of the things that they're supposed to be watching. And certainly one of the things has been that their preferred measure of inflation is a little bit different than the CPI. And that one's still kind of relatively near 2-ish. But the real CPI, what people are paying, is running a little higher than that. And I think that's got to scare them a little bit. And I think they may be forced to act. And certainly if food prices crept up or we had anything dislocate in the oil industry, which isn't my first bet, by the way, but I think food could be an issue that surprises people. Then they could have a real issue on their hands in terms of headline inflation, and I think they would probably be forced to act.
We got a few other pieces of data this week, including industrial production. This has kind of been bouncing around at zero for some time. Are there any prospects of improvement in the industrial space?
Yeah. Just so everybody doesn't get confused, the headline number probably looked pretty good. People are going, what is he saying? It was up 0.8% if you read headline industrial production this month. But most of that all had to do with a big bounce back in energy. Recall in November it was unusually warm and we had really poor numbers from the utility sector, and this month was just the reverse of that. Now, I always like to look at the numbers just with manufacturing. No mining in there, no utilities in there. It's about 70-75% of the index. It's what we really think of as industrial production. And those numbers didn't look good at all. I mean, we were up maybe 0.2% month to month. At least it didn't go down, I suppose. But the year-over-year, 3-month moving average that we like to use, for the last 6-7 months, that number's maybe gone from minus 0.2% to close to a plus 0.2%. Hardly anything to get very excited about in terms of industrial production. We keep on saying things have bottomed, and we'll take some credit for being right on that, but unfortunately it hasn't been by very much. I mean, it's moving up glacially. And certainly one of my big disappointments has been I just want to hope that one of these sentiment indicators turns out to be a good leader. And certainly we've seen a big takeoff in purchasing manager surveys where people are, the outlook in the months ahead. And certainly when we look at that data, it's been exceptionally bullish in tone. And it just didn't turn up in this month's industrial production numbers.
Speaking of that sentiment data, builder sentiment, home builder sentiment was out as well. And that actually came down a little bit from the post-election high.
It did. That was one of the numbers that rallied big time after Trump's election. And that was one that kind of surprised us how well it did. I mean, it was the best number of the year by quite a bit. And I think this number that we got this month, the 67, is is the second best number of the month, but it's down. It just shows that maybe some of that sentiment momentum, people are stepping back and saying, well, maybe it's good, but maybe not that good. I certainly don't think it's in a massive turn yet, but I certainly think that everybody is beginning to question a little bit. And you're seeing it in the stock market even about, well, exactly what's going to happen. People are now not going just off a bit of a hope. They're starting to say, okay, show me the money, so to speak.
Bob, as always, thanks for being here.
Great to be here today.
For Morningstar, I'm Jeremy Glazer. Thanks for watching.